Right now, we're going to do something domestic, and we are going to look at something really interesting because I was floored when he became the chief executive officer of AutoNation. Of course, AutoNation, hugely visible within the distribution and sale of automobiles and trucks in America. And Michael Manley is not just another CEO. This is someone steeped in the Fiat religion, the Chrysler religion. I think, you would even understand, Mike Manley, that in my childhood it was Renault, not Renault. I mean, I go back that far enough. Just simply let us start away from earnings with how you survived this year. Used cars, wow. New cars, not. How's the year been?
Well, I think you've really identified it. On the one hand, we've had significant demand, as you know, and we've been able to fulfill that on the used car side. And on the new car side, it's basically working as closely as we can with the OEMs to try and predict what we're actually going to receive in the month. And most of it, when it hits the ground, is sold. So that's kind of in and out. And the most important thing is to keep our customers informed about when their vehicles are arriving, frankly.
My auto guy, Lisa Bramos, has 14 questions. Let me slip one in here. Are we going to buy electric cars? Is there a real belief here that whether they're a Porsche or whatever or not, something in the middle, or the great desire of a cheap electric car, is America going to buy them?
America will buy electric cars, I have no doubt. The important question is over what time frame will they cover the entire industry. I think what we're seeing is a big increase, but as you and I both know, that's a very specific demographic that's buying them at this moment in time. And what we need to see happen if there's going to be mass adoption is two things, frankly. We need to have an infrastructure that people are very comfortable with, that they can use on a daily basis, and we need to work with the OEMs to drive those prices down so they become much more affordable to the heart of the market. And when those two things happen, you're going to see adoption rates rise, but it's not going to be this year.
One thing a lot of people are struggling with is how much is structural and how much was cyclical. How much of the bump that you got, and frankly, all auto dealerships got, was because of the tight supplies driving people to, no pun intended, to buy more vehicles. How much of that will persist and give you that pricing power that's just been extraordinary?
So here I'm going to turn to our fourth quarter results, because I think if you look at those, you get a partial answer, and then I'll expand on it. One of the things that I think most organizations have done during the pandemic is really look at their cost base, and we have removed significant cost, and that is absolutely structural, because what we've had to do is create efficiency and productivity in a different way, and we're very confident that that will survive beyond the pandemic. I think the increase that we've seen in terms of after-sales revenue with more miles driven as we get out of the pandemic, that naturally, in my view, is going to continue as well. Used volume has been good and will, I think, be sustained. So we come back to margin, and the big question is new vehicle margin. Because notwithstanding the fact that new vehicle volume is down, it's been more than compensated for a big spike in margin. But when I step back, what we're doing is actually selling new vehicles around MSRP. I mean, that's what we were supposed to do. So what the pandemic actually did was press a reset button on the balance of inventory. Now, the key question is, are we going to take the lessons? Are we going to take the advantage of that reset button that's been pressed, and in conjunction with the OEMs, just keep the balance we need to maintain good new car pricing? I think you'll see some mitigation in terms of margin on new cars, but I really believe that lesson is now embedded, and they will not return, in my view, back to the 2018-2017 margins.
Wait, just to be very clear, so the MSRP, that's manufacturer's suggested retail price, you think that we are going to head back to a level that is more in tandem with that suggested retail price? How do you then expect to sustain some of the momentum? And you talk about the efficiencies, but is there also an intention by dealerships to keep supplies tight, to have an order flow, to have something in order to continue maintaining margins to some degree?
So when I talk about our volumes, AutoNation's volumes last year, only 2% of the vehicles we sold were above MSRP. So the vast majority of our new vehicle invoices were at or below MSRP. And that's been able to achieve that because of a better balance between supply and demand. And I think with additional inventory coming in, with the demand that's there, we should be able to maintain that pricing position. Because we are talking about a reduction in the significant discounts that were required when all of the industry was sat on a multiple of stock that we have today. So there was a complete imbalance really between that supply and demand. So we've had this reset button now, and inventory levels are low. In fact, they're too low. So there's an opportunity, I think, to build inventory levels up, not to where they were before, but continue to keep that balance between supply and demand so that we're selling at MSRP.
Michael Manley, thank you so much for joining us. We need to move on to headlines of the moment, but the Chief Executive Officer of AutoNation in the battles of this pandemic and moving units to America in trucks and cars.